بسم الله الرحمن الرحيم. This is a course named Partnership Accounting 2 by Dr. فؤاد محمد الليثى. We are going to present this course in a special mode. All the people are asking themselves, what is cash flow statement? In order to understand the position of cash flow statement, we have to look at a wide range. Question 1. What are the basic financial statements? Any elementary course in accounting present the basic financial statements are. Please have a pencil he would answer that the basic financial statements are income statement, statement of changes in equity, number 3, the balance sheet, number 4, the cash flow statement. We know very well from the first year studying in English what are the main 3 statements. We know how to prepare income statement, how to prepare statement of changes in equity, how to prepare the balance sheets. But what's about this new statement, the cash flow statement? Question 1 has been answered. Question 2, what is the basic accounting model used in preparing these financial statements? When we studied accounting 1, we know that accrual accounting is used, not cash account. Means accrual basis is used. Question 3, do you believe that this financial statement, means the present financial statement, provide users with all required information? Lot of research investigations has been done in order to answer question 3, which is important. Users of financial statement agreed that the financial statement which are presently used are very useful in answering all questions according to accrual. But there is one defect. The defect is, what's about cash position, cash transactions? We know nothing about it. That means what? If in the first year, at the beginning, in 1st of January, the cash balance of company X was 50,000. At the end of the year, it has become 75,000. That means there is an increase of 25,000. What are the causes of this increase? there is an increase of 25,000. That's a big amount. The reverse is true. The beginning of the year, 1 January, it was 50,000. At the end of December, 31st December, it has become 41,000. That means there is a decrease of 9,000. Why this happens? For all the people who listen to this lecture, please have a pen with you to write these questions and try to get the answers from my speech. Question 1 is inquiring about the basic financial statements. That means financial statements that agreed upon. They are 4. The model used in question 2, it is accrual. Efficiency of the model, the present model of accrual, in satisfying the needs of the users, it is not enough. It provides no information about the cash position and the cash transaction. That is why the professional standards has offered the cash flow statement to fill this gap. Question 3. Question 4 now. How the financial statements overcome the defects, mean the deficiency in accrual. The FASB, Financial Accounting Standards Board, and the International Accounting Standards has issued a statement force the corporations to provide statement number 4, which is cash flow statement. That's number 4. What is the main objectives of preparing the cash flow statement? The main objectives of preparing the cash flow statement is to provide the users with complete information about the position of the cash of the corporation, the changes in the position of the corporation cash, to know why this position has been changed from position A to position B. It was 50, then come 70, why, or the reverse. Question again in question 5, the investors and the loan providers knows very well about the trend of the cash position in the past and in the present and the expected trend in the future. Each person is looking for his interests. The investor needs to know whether the company is able to pay for the dividends. The lenders, suppliers need to know the liquidity position of the company. All these information are provided by cash flow statement. Question 6. What is the basic requirement for preparing cash flow statement? The basic requirement for preparing cash flow statement, in other words, if I need to prepare statement 4, what is needed? What should be in my hands? 3 main things should be in your hand. Last income statement. That is number 1. Number 2, the last consecutive balance sheets. That means what? If I am in 2019 at the end of 2019, and I do have in my hand income statement and the 2 consecutive balance sheets. Means the balance sheet at the end of 19 and at the beginning of 19. Plus, number 3, I need to have in my hand additional detailed information about specific items. Again, in concise form, the basic requirement for preparing cash flow statement. In other words, if you need to prepare cash flow statement, you should have in hand the following: last income statement, detailed. Number 2, last 2 consecutive balance sheets. Number 3, additional information about the assets and liabilities and transactions. If you look at your book, you will find the overall framework for preparing cash flow statement. It should be divided into 3 main parts: operating activities, investing activities, financial activities. It is available, I believe, in your book under section 2. Section 2 means cash flow statement, in the middle of the pages. I don't remember. What are the main steps for preparing cash flow statement? These steps easy to say in theory, but in practice it will come easier in your minds. At the end of the chapter 2, there is an appendix titled Steps Required for Preparing Cash Flow Statement. I believe they are almost 8 or 9 steps. What are these steps? We are going to say them, but now the first step is, in your hand you do have the last two balance sheets, assuming 2018 and 2019, the end of each year. You should subtract 2 from 1 and get new column with pencil with the difference between the balances. In other words, let us speak about the figures. It will be more easier. Look at the assets. The first item is cash. Cash at the beginning of the year was 50,000. At the end of the year, it comes to be 72,000. Make an artificial column at the right of the 72 and title it with the difference or triangle. 70 minus 50 means what? Means 20 plus. Don't write plus or anything. If it is without any mark, that means it is positive. If any person looks at the asset side, he will get information about the change in the asset. It was 50, it has become to be 70. Now the difference is 20 increase. under the cash there is one item called receivables. It was 37 at the end of last year. At the end of this year it has become to be 20. That means there is an decrease. The decrease is exactly 12,000. It was 37, it has become to be 20. The decrease is 17,000. Put it between brackets, and so on. Means the additional artificial column, which is titled with the difference, I can get it by subtracting the balances of the last year 2019 from the figures in the end of 2018. And so on. After receivable you will find inventory, then prepaid expenses, then intangible assets, etc. What you have done with the assets, you can do it also with the liabilities. And be sure that the difference between the total in 2019 and 2018 equals to the difference between the sum of the artificial column. Please accept this talking in this theory lecture as it is. Many steps for solving cash flow exercises, cash flow statement exercises. Step number 1. These steps are available with you in your book. I don't remember the number of the page, but I am going to bring them to you now. Please wait a minute. These steps, don't try them because they are available with you in your book at page 82. Page 82 in appendix 2. Again, these main steps for solving the exercises are available on page, as I told you just now, 82, appendix 2. Okay? By the way, I forgot to tell you that there are two methods for preparing cash flow statement. There is a direct method and there is indirect method. In the direct method, it assumes that there is a management information system complete in the company. That means what? All the cash cash documents should have a code. Code means what? You should divide all the activities of the corporation into 3 main sections or groups. Operating group, number 1. Number 2, investing group. Number 3, financing group. And in each, let us give them a letter. Operating O, the letter is O as abbreviation. Investing I, financing F. All the documents which is related to cash in the corporation during the year should be classified into the 3 activities: O, I, F. Let us look at O. O means operating. The operating is very important for the industrial corporations. Wages for the laborers, the expenses for the laborers or for the engineers. This is considered expense. Is this inflow or outflow? This is outflow. That means the document should have a title up, O, I. Cash sales. Cash sales means money has been received from the customer. It should be in the operation. I am sorry, again, regarding the expenses of the engineers, it should be O, operation, the first O. The second O means outflow. And when I receive money from cash sales, it should be O, inflow, OI. Whatever it is at the end of the period should be week or half month or year. The computer in the accounting system or the information system can give me information about the total inflow in the operating by accumulating the figures in IO. Operating inflow, OI, and the total of the OE means operating expenses. But assuming that the company has no complete accounting management information system, we can use it is used to use the indirect method. In all the books, there is almost 80% of the companies use the indirect method. Indirect method means what? Let us have the income statement and the 2 consecutive years of balance sheet and get indirectly clues or information about the movement, transactions, cash transactions that happened during the year. Many steps. Let us go again to, I believe, I don't remember what page, 80 or 82, I told you just now. It is available now on the screen. Step 1, be sure you are provided with the 3 items: income statement for the last year and the 2 consecutive balance sheets. Number 2, calculate the difference between cash balances included in asset side of the 2 balance sheets. Number 3, the difference between the 2 cash balances represents the key for verifying your solution. That means what? Assuming that you have a pencil and you are going to draw the cash flow statement, you can divide the page into 3 parts. The first upper third specify 2 operating transactions, the middle 4 investing transactions, the last 4 financing transactions. Okay, we are going to use the clues that comes from the artificial column, which is the difference between balance sheet 1 and balance sheet 2, plus the additional information in establishing the cash flow statement. What we are saying here, that the difference between the cash balances included the 3 sections should have total, and the total of operating activities and investing activities and financing activities should equal to the difference between the cash balances included in the asset side. How it comes? Assuming that the cash was on the first year 40, at the end of the year 52. That means there is an increase of 12,000. After you finish your statement, the total cash inflow in operation plus cash flow in investing plus financing should have the 12,000, the same difference between 52 and 40. I told you before that the end year cash was 40, then at the end of the year it comes to be 52. That means 1 and 2 and 3 now finished. Number 4, saying to you, draw a cash flow format like the one mentioned in page 735 on your book. Cash flow statement. Available on page 46 on your book. 46. Let us correct this. Okay, on page 46, cash flow, operating, investing, financing. By the way, why it is called indirect method that we are using? Because the only way to get the cash flow statement is to go to the income summary and get the net income. The net income is calculating using the accrual accounting. The indirect method adjusts this income summary, income net income and transfer it into cash net income. That means we are transferring the accrual net income into cash income. How we are going to know them? Let us in this class just know up to 0.5. 0.5 what? We cannot explain the operating activities and the investing activities plus the financing activities in the same lecture. Let us start with the operating activities. Operating activities means what? Means the operations of the company, the main activities of the company. Company A and Company B, they work in the same industry, assuming textiles, but the operations of Company B is more than the operations of Company A. That's why the cash transactions are more and the net income is more. These operating activities, we are going to know how to compute them. It means we are going to devote the first third of the page for operation activities. I am giving you a hint. Start with getting to write operating cash flow from operating activities in the first third, in the middle cash flow from investing activities, at the end of third page cash flow from financing activities. I told you now, please forget 2 and 3 and let us emphasize on the first third, which is regarding operating activities. What does it mean, operating activities? It means the factory. What is happening in the factory regarding the cash transaction? Even in the bank, what is happening on the windows of the cashiers during the year regarding the cash transaction? In the grocery, what is happening in the shops, buying and selling during the year regarding the cash transaction? That is what I mean by operations. And the operations in most cases represent more than 40% of the total cash transaction. We have stopped up to 5A, operating activities. Start with them. Please write net income of the last year first in the section of the operations. Then write adjustment. We need to adjust the accrual net income into cash basis. We are transferring accrual accounting into cash basis. How? I am telling you. In accrual accounting, we have taken in consideration depreciation. Depreciation is considered non-cash expense. It has been deducted in the net income, in the income summary, in order to come to the net income. That's why we add it, add depreciation expense. In the income summary, we have deducted the losses on sale of assets. Now we have to add them back to the net income. If we add these two items, that means what? we are going to make the figure of net income more near cash basis than accrual basis. Then deduct gains in the income summary, which is based on accrual. The gains was added. Now we are going to deduct them in order to erase the effects. The effect of previously adding them. Okay? C. Add or deduct changes in current assets as per model schedule. I'm telling you, there is no schedule or something. I'm giving you one example. Current items means what? Transactions that happen in less than 1 year. Like what? Like buying inventory, selling inventory, collecting money from receivables, paying for creditors, etc. Current assets, these items, whether they are in assets or in liabilities, you can use them. I'm giving you one small example, and the figures will illustrate it more in future. If the receivable at the 1st of January was 75,000, it has become at the end of the year to be 50,000. That means what? There is a decrease in account receivable. If you open T account, put 75 on the left, beginning balance, put 50 on the right with the title ending balance EB. That means there is one entry happened during the year. Means what? Cash collections, cash debit, and the credit account receivable. In summary, this transaction means what? The receivables the company has collected from receivable during the year 25,000. The journal entry that happens was cash debit, credit account receivable. That means all the current assets, when they are decreased balances, when the change was negative, that means there is an increase in cash happened. That's why you put change in account receivable with the amount of 25,000 plus, and the reverse. Same thing in current liabilities, and I don't want to confuse you with the examples, but it is opposite of what happened in the current assets. That means what? If the liabilities was 15,000 at the beginning of the year, credit, it has become to be 13,000 at the end of the year. That means I have already paid for them 12,000. The journal entry was account payable debit and the cash is credit. That means the current liabilities, when all the current liabilities, when they decrease, that indicate a decrease in the cash. That's why current liabilities decrease should be minus in the operating section of the balance sheet. Now let us stop up to this portion, number 5. And we are going to take more numerical example about the operating activities only, nothing more. We are looking for operating activities only. One student might ask me, what about investing and financing? No, don't confuse me and confuse yourself. Let us solve them in later periods. If you understand operate activities, that means, or operating cash flow, that means what? You are going to get 75% of the degree. Page, I'm giving you some exercises at the end of the lecture. And all the exercises will be concentrated on operating activities only. Try to solve exercises, all exercises on page 71 and 72. That means exercise 18, 19, all the exercises set B, 1, 2, 3, 4, 5, 6 up to 9. Again, I'm telling you the exercises. Page 71 and 72. Exercise 18 and 19. Then exercises set B, EB1, EB2, EB3 up to AB9 on page 72. That means completely pages 71 and 72. And you are going to elaborate about this important section of cash flow statement, which is cash flow from operating activities. Again, I am telling you, in order to see complete complete cash flow statement, on page 46, cash flow from operating activities, the first third of this cash flow statement, adjustment of net income. Net cash provided from operating activities is 13,840. We have taken up to this portion only, nothing more. How he comes to 13,840 on page 46 of the book? He took the net income and make 7 adjustments. That will be our concentration in lecture 2. Thank you a lot. And God bless you. I hope to overcome this problem as possible as we can. Thank you.